Welcome to the Ripple quarterly webinar, Token Relations. I am Jacqueline Melnick, the founder and CEO of Token Relations, and joining me today are Ripple's Director of Product, Jasmine Cooper, VP Managing Director in UK and Europe, Cassie Craddock, and Senior VP of Stablecoins, Jack McDonald. Hello and good morning or good afternoon, guys.
Good morning.
Hi there.
Thanks for having us.
Yeah, for sure. Before we get started, I'm going to start with some background and context for listeners. Essentially, it has been a very significant quarter for Ripple and XRP Ledger or XRPL. Ripple is a digital asset infrastructure provider that develops solutions that help financial institutions integrate blockchain and digital assets into their operations. The XRPL is a decentralized public blockchain that has been running for more than a decade, and with Ripple's contributing alongside a global community of developers and innovators. In the first half of the year, Ripple advanced both payments and institutional DeFi, growing RLUSD in its enterprise-grade USD stablecoin through new integrations and expanding use cases that power cross-border payments, as well as on-chain finance. Other milestones include the recent acquisition of Rail and Hidden Road, as well as new custody partnerships in the Middle East and Asia Pacific. Ripple also achieved key licenses and regulatory approvals from the UAE's virtual assets regime to progress toward a MiCA license in Europe, positioning it to serve institutions in major global markets. That was a mouthful. On the XRPL side, the launch of the EVM sidechain also introduced programmability and smart contract capabilities, which is a key step in Ripple's institutional DeFi roadmap. The XRPL stablecoin market cap rose 80% this quarter to 166 million, and real-world asset tokenization is accelerating across treasuries, commercial paper, and government-backed real estate projects. Today's discussion will explore how all of these developments tie into broader trends, from the growth of RLUSD and cross-border payments to compliant blockchain infrastructure, institutional DeFi, and our RWA tokenization. To start off, Cassie, I would love to start with you on the custody momentum. And Ripple's custody footprint is expanding fast from BDACS in Asia Pacific to Control Alt in the Middle East, supporting government-backed real estate tokenization. How do you kind of see this expanding custodies network changing in the way institutions enter and operate in digital asset markets?
Well, firstly, I think custody is a really important and critical piece of infrastructure for Ripple to own, and for us to really be able to take this idea of offering end-to-end infrastructure, digital asset infrastructure to banks and financial institutions. What we know is that custody is a critical entry point, and before you want to do anything within the digital asset space, you need to make sure that you're custodying the assets securely and in the most compliant way. And so offering that service has been really important for us as a company. And once a bank or a financial institution has a custody platform, they can then start to think about what use cases they want to build on top of that. And we've frankly seen a handful of really compelling use cases that continue to grow and drive momentum across the globe. One use case in particular is around kind of tokenization, and as tokenized assets are projected to reach around $10 trillion by 2030. There's no surprise that institutions are really starting to lean in and think about their strategy. We recently announced our partnership in Dubai with Control Alt that are supporting government-backed real estate tokenization, which I think is exceptionally exciting. If we double click on what's happening in Europe, and another use case that's really kind of taking off here is around stablecoins. And we at Ripple recently we've been partnered with SocGen Forge for a long period of time, but recently launched the Euro CV stablecoin on the XRP ledger from Ripple Custody, which I think is again a compelling use case that we're continuing to see around the globe. More generally, though, customers, whether that's retail or institutional, are really seizing the momentum from a regulatory perspective to start offering a digital asset offering to their customers. We recently announced our partnership with BDAX to bring digital asset custody to their institutional investors out in South Korea. And of course, the long-standing relationship that we have with BBVA Switzerland that is, gearing and offering digital asset custody to their institutional customers. Now, the main reason that we're starting to see, or we're seeing this adoption really happening now is regulatory clarity. And it's providing banks and the largest financial institutions in the world, I guess, the incentive or the ability to be able to really lean into offering this to their customers. MiCA here in Europe really has kind of kick-started that momentum, and what we've seen is banks almost racing on a regional basis to launch a digital asset offering to their customers, because their customers are demanding it. It's no longer a nice to have, it's a must have to keep competitiveness within their specific region. And I think that that momentum around regulatory clarity is only going to continue. And last year we saw 250% year-on-year growth here in Europe from a custody perspective, and I expect that kind of momentum will kick on into the second half of 2025 and into 2026.
Yeah, it's interesting that you bring that up too, because I wanted to ask you about kind of the US side of things. I know Ripple recently applied for a US trust charter. Why is taking, a compliance first approach on that side so central to the strategy that Ripple has had both in the US, but also from a global perspective? And how does that kind of help serve institutions long term?
I think, Jack, maybe that's one for you to pick up.
Sure. I would say in general, Ripple has taken a compliance first approach in part in service to our customer base. Our target customer base has and continues to be institutions, and we believe that going forward more than ever, institutions will increasingly value the rigor, the regulatory scrutiny, and the comfort that regulations give to our clients and their clients. And so it's consistent with what we've done. We have over 60 licenses across the globe. We're continuing adding more and more to our portfolio. And as Cassie mentioned, as regulatory clarity becomes more pronounced, we're seizing on those opportunities to position ourselves to really take advantage of them. We have a very robust organization from an infrastructure standpoint in terms of our legal and compliance teams, just as two examples. And so we want to take advantage of that and really separate ourselves from some of the competition who may not have those type of resources or that type of focus to do that. Specifically in the US, the National Trust Bank charter application that we recently applied for, in large part is being driven by our stablecoin initiative. The recently enacted into law Genius Bill provides for a dual hybrid approach for state and federal legislation around stablecoin issuers. We've been in the market for a little over 6 months. We're already just shy of 700 million of market cap, so growing very quickly, as you had mentioned, and anticipate crossing that threshold sooner rather than later. And so part of it is to future-proof against where the regulations are going in the U.S. We also believe that being a federally chartered bank under the auspices of the Office of the Control of the Currency will help us expand our presence abroad when other regulators in different jurisdictions are facing off against a federally chartered bank. We think that will accrue to our benefit. We also see advantages in terms of the legal structure of how we hold reserves in bankruptcy remote segregated accounts, and going to the a federal charter will just further extend the protection that we can afford to our clients. So a number of different reasons and motivations of why we went forward with that charter application.
Right. I also wanted to ask you about the Rail acquisition, which I mentioned in the intro. Ripple is deepening its infrastructure for stablecoin powered payments with simplifying kind of how institutions settle cross borders for RLUSD and other assets. How do you kind of see stablecoins transforming the payment experience? And in regards to the Rail acquisition, what role does that kind of play in strengthening, RLUSD adoption, especially, in the markets today?
Well, I can talk a little bit about the stablecoin and payments partnership, and maybe Cassie can go into a little bit more around specifically how it benefits our payments business. But in general, we're continuing to expand organically our footprint in the payments business, new corridors, et cetera, and also using this time in the market to be opportunistic from an M&A standpoint where opportunities present themselves. I think stable coins and payments are increasingly becoming the unanimous first real world use case that people can really understand the benefits of using a stable coin as a bridge asset between a sender and a receiver. And so and it's frankly part of the origin story of why Ripple decided to launch RLUSD late last year, having been really in the front row of watching stablecoins being adopted in global payments. We had been a top minter of USDC over the preceding years, and ultimately decided that we could do a better job providing a holistic solution to our clients if we were actually the issuer of a stablecoin as well. So we work with a number of different stablecoins, but increasingly prioritizing RLUSD into payments. It's cheaper, it's faster, taking advantage of the native aspects of the XRP ledger, which Jazzy will speak about. It was a ledger designed specifically for global payments. And so we see the opportunity growing around how stablecoins are used globally in the payments business. But maybe Cassie, if you want to touch on specifically Rail and why that was attractive to us.
Sure, and I think it's no surprise that financial institutions want to provide their customers with a better experience, and inherently blockchain technology and stable coins enables businesses to provide a better experience, not only from a cost perspective, but scale, breadth, and also kind of from a transparency perspective. So the origins of Ripple payments are now using stable coins as part of that payment offering. Our customers frankly love being able to do that, send payments at scale around the globe instantaneously. The Ripple acquisition of Rail is extremely exciting. So we announced that we'd be acquiring them for $200 million, and this really just extends our capabilities in stablecoin infrastructure. And what we love about Rail is that they've proven out that they have product market fit and really quite frankly a deep expertise in building infrastructure for stablecoin payments. So stablecoins like RLUSD are transforming the payments experience. We've just talked about that, and we believe that with stablecoin powered rails, businesses can scale into new markets more effectively. And combining this with trusted infrastructure like Rails, we believe that we can provide our customers with a much greater experience. So we know that the stablecoin race is on from a competitive perspective, and I believe that we're in a really good, strong position of strength to be able to capitalize on that.
Yeah, and we'll go into the stablecoins a bit more in a minute, but Jazzy, I'd love to get your perspective too on the product side. How does this all play a role?
Yeah, of course. So just to take a step back and define, how RippleX fits into all of this. RippleX is the business unit within Ripple that's focused on the XRP ledger, the public layer one blockchain. And I really view XRP ledger as the foundation for all of Ripple's products that Cassie, that Jack, that others work on. And so as Jack mentioned, the XRP ledger was purpose built for payments over a decade ago and has a number of features in it that enable it to do that, at a best in class level. So from everything from speed to cost, transactions costing a fraction of a penny, to purpose built features to facilitate global payments. So there are native transactions to the blockchain that support not only a regular payment, but a cross currency payment, all of the FX transactions happening under the hood, built-in order books, as well as AMM functionality to support high liquidity, low cost foreign exchange. So it's really, really powerful infrastructure, and the pieces really come together very well when you start to introduce a stablecoin. Obviously, a decade ago, relying on a native, cryptocurrency to support payments is probably still an improvement on traditional rails, but given the volatility of your typical native crypto asset, it doesn't quite meet the level that a stablecoin does. So stablecoin, I think, brings blockchain payments and the potential of that industry to a whole other level, and we're really starting to see that hockey stick growth. We saw nearly 30 trillion in on-chain stablecoin volume in 2024. 150% year-on-year growth, and the value is very clear. It's faster, it's cheaper, there's greater connectivity and accessibility, at a much lower cost. And so combining that with, all of the use cases that we're seeing for cross-border payments, whether it's payroll, whether it's merchants, whether it's just regular B2B activity, the opportunity here is huge, and I think XRP Ledger is well poised to be a foundation for this activity.
Yeah, building on top of that, Jazzy and Cassie, I'd love to get your take on Ripple's acquisition of Hidden Road as well, which adds, clearing and cross-margining capabilities. How does that kind of fit into the bigger picture of enabling both traditional and digital asset flows on the same infrastructure?
Yeah, so again, back to kind of seizing the moment and really looking at M&A as a catalyst for the business. We recently announced the acquisition of Hidden Road for $1.25 billion, which is one of the largest deals ever in the digital asset space, and really makes Ripple the first crypto company to own a prime broker. And I think it's something that we're particularly excited about from that perspective. And this actually starts to bring to life the promise of bridging the gap between crypto and institutional customers at scale. And Hidden Road, will have Hidden Road has clearing and cross-margin capabilities. We have a unified platform that offers digital asset infrastructure from end to end, both in fiat and crypto, and will enable the management of risk more efficiently and access of deep liquidity. And this really is a foundational step forward in enabling real-world utility for RLUSD and further establishing XRP Ledger as the blockchain of choice for institutional DeFi. And I think it's something, again, that we're exceptionally excited about in terms of bridging that gap between TradFi and the broader digital asset ecosystem.
We're doing some very exciting things with RLUSD, increasingly working with regulators to have that treated as good capital or good collateral, where you can introduce a stable coin as a proxy for US dollar, which has historically been the one asset that prime brokers writ large will accept as collateral, and then being able to advantage RLUSD and take advantage of the attributes of it being on chain and how quickly it can move 24/7. And that's been a big unlock for a lot of the Hidden Road customers to utilize that in terms of their lend borrow, which just further enhances the margin capabilities of Hidden Road. The other partnership internally that we're excited about extending Hidden Road's business to is what we're doing in Ripple Trading and Markets, a trade execution business that's been largely serving our payments customers over the years, where there's been an FX conversion that's needed to happen. We can now partner that business together with the Hidden Road, the stablecoin business, custody business, et cetera. And so we start to paint this one Ripple picture where there's a number of different products and services that we can bring to a client holistically in more of a solution-oriented sort of context.
Yeah, I think we've seen really good examples of that, where customers they see Ripple as a trusted advisor and want to partner with them more broadly. It's not just about partnering on custody or partnering on stablecoin or partnering on payments. They want to look at the Ripple offering as a holistic solution. I think we've got good examples like Archax here in the UK. They're a custody client of ours. They're also partnering with us on the XRP Ledger side, bringing RWAs on chain. So that kind of trend is something that we're starting to see quite a bit of, which we're excited about.
Mm-hmm. I was going to ask is, what do you see as like the next big opportunity and key use cases for RLUSD? Maybe Jack, if you want to chime in first on that front.
Yeah, in terms of use cases, I mean, we're certainly believers that the industry is going to continue to grow in many different directions. I think it's fair to summarize the $0 to $260 billion journey has been largely driven by retail investors into crypto who have been looking for on and off ramps. In and over the last year or so, we're seeing more institutions adopt it. We're big believers in the thesis that the next 10x from here is going to be largely driven by institutions, while the retail side of the market we think will continue to grow. I think you're going to see much larger leaps forward in terms of institutional adoption for a number of different reasons. Part of it is certainly the regulatory tailwinds that we have in the US and elsewhere. Part of it's the expansion of the infrastructure that institutions need, and each one of us on this call is doing our part, I think, in bringing solutions to the market there, both from a client solution standpoint and also what Jazzy's doing with her team on the XRP ledger. We have a couple particular use cases that we're focused on. I touched upon global payments, which is a broad category. It's not unique to us in terms of stablecoins. We do feel like we can bring this one Ripple sort of solution to corporate treasuries specifically, where there's a big need for moving money globally around different organizations, and to do that in a very robust way where the cost of execution needs to be low. We can introduce our trading business. We can certainly utilize RLUSD where there's a custody need for those corporates, and we bring these together in a vertically integrated way, and we can be much more cost effective in terms of doing that. So that's very exciting to us. Certainly the capital markets play, which I touched upon, that can pull in our hidden road partners, the Ripple trading and markets, the custody partners, and to be able to do that with RLUSD as good collateral. And I would say another one, and maybe Jazzy, you can expand on this, is everything we're doing in partnership and contribution to the XRP ledger around RWA and tokenization there, and using stablecoins as an on and off ramp into that ecosystem. I think we're pushing the envelope of what is possible there, working with different types of asset issuers of real world assets, and contributing in multiple ways around the Ripple family of products.
Yeah, I think just to expand on that, I think Jack makes some great points about, institutions unlocking the next 10x, 100x growth within blockchain adoption on the horizon for us. And I think that means a change in what we build and how we go to market for developers in the ecosystem and in blockchain as well. So, if we're no longer looking to attract the technologists, the early adopters, and we're looking for institutions to leverage blockchain, we really need to be ready with you have a big major problem or opportunity to improve, and here's a solution for you. And we need to have ready-made solutions that solve that problem, and create a 10x better solution for them than what they have in the market today. And so for that, we're looking at a number of key use cases. We've talked about stablecoin payments, and the opportunity there is obvious. The growth is already showing up in the market. Collateral mobility as well. We've talked about using the blockchain for real-time transferability of assets. This is something Hidden Road is really leaning into. And my team, on the product side within, RippleX is looking to continue to expand the XRP ledger capabilities to support this with on-chain repos, on-chain DVP, a number of features that will just continue to expand the value that blockchain can add to institutions. Trade finance is another one that we're seeing, continual inbound requests for, as the opportunity to increase transparency in such a complex space with so many different moving pieces and contracts, and making everything transparent, real time, and highly, highly efficient has proven to offer a huge amount of value for institutions within the trade finance space. So making the value prop and the solution clear is really our main focus right now.
Right. Also, when people talk about Ripple's role in payments and liquidity, they often bring up RLUSD and XRP. How do you kind of think about their distinct roles in the ecosystem, and why does having both matter?
I'm sure we can all chime in here. I'll take a first stab, but
Please.
just for anyone on the in the audience who may not and there's often some confusion between the two. XRP, the native token on the XRP ledger, put that over there. And that's a kind of traditional cryptocurrency. RLUSD, a dollar-backed stablecoin issued by Ripple, and the more and more activity, we issued RLUSD natively on the XRP ledger out of the gates. The more activity, every time we mint RLUSD on the XRP ledger, every time there's a transaction on the XRP ledger, XRP is the native gas token, has utility. It's the grease in the wheels, if you will, that makes everything work. And so as we've grown from 0 to almost 700 million here, there's a lot of activity that is a result of that happening on the XRP ledger, that in turn is using XRP as that bridge asset. As it relates to payments, the last thing I would say, there are some customers who want to continue to use a cryptocurrency as a bridge asset. XRP really purpose-built, among other things, for being a bridge asset on the payments platform. There are other customers who for any number of different reasons, don't want to use a cryptocurrency or don't like the volatility that's inherent in often crypto. The stablecoin presents a very compelling alternative, given it's very boring. It's always worth a dollar, and so there are many customers who just prefer that, or TradFi customers who, for whatever reason, can't or just weren't comfortable using a crypto asset, but a stablecoin I think of as really the least crypto type of crypto there is. And so we're seeing a lot of interest in using stablecoins there.
I can give quick 2 cents on the XRP ledger side and hand to Cassie. I mean, XRP is not going anywhere. It's embedded within the XRP ledger. So Jack mentioned transaction fees. XRP is burned on it, every transaction that happens on the XRP ledger. It's also used as account reserves. So reserves to open an account, reserves to hold a certain amount of objects in your account. And then it's also used as a bridge asset built into the native decentralized exchange. So it offers, if there isn't liquidity between, Canadian dollar and Japanese yen, that'll automatically bridge through XRP through a feature called auto bridging. So from an infrastructure perspective, it's not going anywhere when the XRP ledger is used. And then, as Jack mentioned, in use cases like payments, for example, where you do want that stability, RLUSD and stablecoins are a nice option for that.
And I think then just more generally on our products and services here at Ripple, from a custody perspective, we want to be able to, our customers want to be able to hold XRP. And our customers also want to be able to offer stablecoins. So having that breadth and depth of ledger support and also token support is really important for competitiveness, but also just being flexible for our customers. On the payment side, of course, we started out by really focusing on moving value through XRP, and feedback from our customers was that in some scenarios their preference would be to leverage stablecoins for those payments. So the Ripple payment product that can now process from a global perspective in 90 corridors, it's done over $70 billion. There's a variation of what that looks like in terms of whether or not we're leveraging XRP or leveraging stablecoins for those payments, and it really does frankly depend on what currency and the preference of the customer. I think our goal really is to solve customer problems and to say yes more to customers, the products have the flexibility in terms of how they can deliver that last mile.
Right. I mean, that makes a lot of sense too. And I also think about kind of like the positioning of RLUSD2 against other stable coins like USDT, USDG, USDC, so on and so forth. The list goes on. But how do you kind of think about positioning it in terms of like issuance and trust, and also in a market that is arguably pretty crowded?
I was just saying increasingly more crowded. And
right.
I believe the thesis that not all stable coins are the same has never rung more true. We've positioned RLUSD from day one to be the most trusted stable coin in the market, and we truly believe that's the case for a number of different reasons. The licensed approach we have, even in the US, there are many stablecoin issuers, not to get into names, but the largest, largely unregulated, and that's worked for them in the 0 to 250 journey. There are others here in the US that have a successful business that have launched that off money transmitter licenses. We've launched from day one RLUSD from a state trust company. And as a trust company, we act as a fiduciary, which allows us to hold customer assets and segregated bankruptcy remote accounts under the banking laws of New York State. That's a big differentiator. Again, it hasn't been a big driver for retail investors into the space, but given the choice now, the institutions who are coming in, we think are really going to value that, and certainly taking another step forward, which I reflected on earlier around being a national trust bank. We think that will just afford us even more confidence and trust from our end clients. We also rely heavily on the brand recognition and the history behind Ripple. Having started the business in 2012, Ripple, I think, is known as a very stable force in the digital asset arena, and has always been really a bedrock of how this industry has grown. Obviously, we've got the resources to continue to invest in the company, and I think there's a lot of faith and confidence that is appropriately given to Ripple. We've got an acute focus on serving institutions, And many of our customers already use us in some of these other products. And so, both through organic growth and the acquisitions we've made, this One Ripple solution-oriented approach that we've recently been focusing more and more, and we think is going to be a big driver in generating further trust in terms of how institutions, coupled with the regulatory portfolio of licenses we have around the world, will drive more and more adoption into RLUSD.
And then on the broader outlook, Cassie, I'd love to get your take on this too, is like, how is the demand for stablecoin-based payments evolving? Are you seeing specific industries or corridors where they're starting to think about replacing traditional methods with this? Also, Jack, too. I mean, actually, all three of you could chime in on this, but I was thinking more from like the European angle first, Cassie.
Yeah, I think the time is now. And I alluded it to at the top of the conversation. Regulatory clarity is making institutions really lean into the digital asset space, and one of those key and killer use cases for blockchain technology is cross-border payments and leveraging stable coins to do that. We've seen a significant increase in adoption from a global perspective. I think more broadly, our customers and participants within the banking and financial services space, they want to provide their customers with a better experience, and a better experience is cheaper, faster, more transparent. And stablecoin payments really enables that. I like to use the analogy of, in order for me to send money to my aunt in Australia, it's literally quicker for me to fly it on the aeroplane, head down to Heathrow Airport, and actually hand deliver the goods than it is to send an international wire. And stablecoin payments and leveraging digital assets for cross-border, you can do that instantaneously. It's wildly different, that customer experience, and so it's no surprise that we've started to see kind of a significant uptick in these financial institutions really wanting to lean into the space.
I think there's also, just to highlight the regulatory tailwinds, and so we're getting a message out to institutions and big corporate treasuries, which I've spoken about, and others, that the water is safe to come in, right? And so I think that's one of the impetus why there's more exploration happening. And then the infrastructure, which continues to get more robust and more institutional or enterprise grade. And now you couple that with a stable coin that is, by its very nature, doesn't have the volatility, and it can be done in a much more cost-effective way. You don't have this FX conversion risk, and you don't have the timing delays that Cassie articulated. It's a much more compelling offering today than it's ever been before. And so the world's largest brand name sort of corporates are starting to look at these type of solutions to complement what they already have on the fiat side.
And I think Ripple's in a really unique position that we've been doing this now for over a decade, and banks and financial institutions are looking for a partner that understands the complexity of not just building a network leveraging digital assets, which is very challenging. Frankly, it's one of our competitive edges versus the other industry participants. But they want somebody that understands how to do this in a compliant manner. And so picking that partner is a first step. And what we've seen is that the first step is custody, most likely, but then it's how can I use this technology really to improve our customer experiences, and we're starting to see examples of clients really wanting to go on that kind of longer term journey with us, which I alluded to Archax earlier, that is buying multiple products from us or partnering with us more broadly. There are many examples of that now happening due to our longevity in the market and really understanding how to do this at scale with institutions.
Yeah, I also kind of want to shift gears or build on top of that, go down the institutional DeFi roadmap side of things, as well as RWA momentum. Jazzy, I'd love to get your take on what other XRPL use cases are you personally most excited about, or something that is emerging from the developer community today. And then we could also dive into other aspects on this front.
Definitely. I mean, just to start on stablecoin payments, we've been talking a lot about this. On-chain FX is, a massive opportunity in terms of, um, you know, reducing spreads, increasing, improving settlement times, and access to liquidity on various markets around the globe. And we're building on top of that. We don't expect institutions to engage in decentralized exchange, unregulated, anonymous markets. We're looking to meet institutions where they are and where their compliance teams feel comfortable. And so we're introducing a new set of features rather, that creates a concept called permission domains and the permission DEX. And this is basically introducing compliant, regulated, decentralized exchange trading on the XRP ledger for the first time. And we've seen other DEXs introduce permission trading in the past, and we've seen some of the pitfalls of creating, siloed permission markets where you just don't have the liquidity that you need for that market to be successful. So we've designed it in a way that it interacts directly with the permissionless DEX. And really allows you to get best of both worlds by creating arbitrage opportunities between the two markets, to keep them balanced and keep the depth of liquidity on the permission side as well. So that feature is currently in the voting process in the XRPL validator set, and we're hopeful that it goes through and creates opportunities for permissioned decentralized exchange trading for FX in the future. A couple others that we're excited about is we're working on a new feature that enables credit origination on the XRP ledger. So we're starting with, fixed term on-chain loans with either, collateral off-chain, through legal agreements or with a licensed custodian. That's where we're seeing the most demand right now, is for collateral to sit with a regulated custodian. That's where institutions have the most trust, but still being able to tap into liquidity aggregation and consolidation opportunities that the blockchain brings when it comes to access to credit. And that can feed into a number of different opportunities, Hidden Road as expressed interest in sourcing liquidity through this credit origination protocol, and a number of other, opportunities that we have lined up for that. So, ultimately, back to what I mentioned before, the three big ones we're really seeing: stablecoin payments, collateral mobility, and trade finance as well. And these are the new features that we're really digging into. I guess the last one that I'll mention on the trade finance side is programmable escrows. So we're introducing native programmability to the XRP ledger through smart features. So taking protocol native features like escrow that have existed for a decade and adding a layer of programmability and configurability on top of that, and escrows, and adding programmable release conditions to support trade finance and other use cases as well will be our first go-to-market use case, if and when the community accepts that amendment to the XRP ledger.
Yeah, there's also the XRPL EVM sidechain, which I wanted to ask you kind of what was the decision behind that, and how does that kind of fit into the institutional DeFi roadmap that Ripple is contributing to on the XRPL?
Yeah, of course. So, we're looking to meet a number of different, developer sets where they are and where they're looking to build. So EVM is obviously a legacy blockchain development environment where there's demand, where there's momentum. It gives developers flexibility and optionality for rapid and ultimately limitless innovation. And so, we're expecting this will increase liquidity within the XRPL ecosystem, long tail user base within XRPL, and ultimately help us improve the foundation for institutional DeFi. A lot of the features that I mentioned are highly compliant, purpose-built for institutions, but they have a longer development cycle. There's a lot more boxes to check and review from a compliance standpoint, and having EVM available in parallel will create that opportunity for rapid innovation and experimentation to make sure we can offer cutting edge technologies and financial infrastructure within the XRPL ecosystem. So, the EVM programmability will go hand in hand with mainnet programmability that I mentioned, to ultimately give developers all of the options that they want to create new applications in the blockchain.
I also wanted to ask on the front of the plethora of new blockchains launching. I think that's a short way to put it. How do you kind of see XRPL differentiating itself from kind of the pack and all of these different ones that are coming in and out and everything in between?
Yeah. Honestly, I've been excited by the news of a number of different L1s purpose-built, for payments and institutional finance. I think, XRPL was arguably the first blockchain purpose-built for payments over a decade ago, as I mentioned, and seeing others come on the scene is only validating of, hey, we're all working on the right use cases. We're all in it together in terms of this industry, and creating an opportunity for blockchain, which is superior technology to the traditional legacy financial rails, to truly, take place and start to support these use cases. And so, I see us all as one team in a way, in terms of disrupting some of the old technology that just isn't meeting the needs of institutions and their customers. In terms of XRPL differentiating, it's battle tested. We've been doing on-chain payments for a decade. The network is highly reliable, it's durable, has not had a hack, is still operating at the highest levels of efficiency from a cost and speed standpoint. And then in terms of use cases, I mean, it's a privilege to have our customers right next door in terms of building payments infrastructure for our payments team, building general blockchain infrastructure for our stablecoin, for our custody team, and now for Hidden Roads. So I think bringing all of these pieces together to be able to offer a true, one Ripple solution to real problems in the market, is really what sets us apart from those other chains.
There's also been a lot of real-world asset tokenization on XRPL, which has expanded from, treasuries and commercial paper to real estate and other assets. I know I mentioned this in the intro, but where are you seeing the most traction today, and what types of assets do you think will see the fastest adoption on chain? I know we talked about stablecoins, but I'm also talking about that category. Yeah,
I'll opine here, and then would love to hear Cassie and Jack's opinions as well. Yeah, I mean, I'm very excited and proud that XRP Ledger is broken into top 10 blockchains in real world asset market cap. There's a number of different asset classes that are being explored, ranging from commercial paper to real estate. From my perspective, I really believe in the blockchain potential to improve legacy processes and infrastructure for some of these use cases, as I've mentioned. And so I'm very happy just keeping it simple. And when it comes to stablecoins for stablecoin payments and treasuries for on-chain collateral, if you look at traditional financial markets, it's cash and cash-like securities that are serving as collateral in the market. So I don't, necessarily feel the need to overcomplicate it. I think these on-chain treasuries and issuing them in a way that they're reliable, that they can always be redeemed, that they are liquid, and meet the HQLA, the high quality liquid asset standards that prime brokers and other clearinghouses will require, it is really the key to these use cases taking off and gaining long-term traction and adoption. So those are the two I'm most excited about. But real estate fractionalization, lowering the barrier to entry to these asset classes is another huge opportunity that's exciting, and we shouldn't ignore it.
I also want to move towards the end of our conversation, looking ahead for all the different initiatives that we talked about. What are kind of the product developments or partnerships in the pipeline that can make all of this vision a reality, or give us a little inside intel on what's coming?
I would say what I'm most excited about, outside of the kind of the broader market growth around stablecoins, we touched upon the treasury use cases and what we're doing in capital markets and working with the regulators. But I think internally, what I'm most excited about is the coming together of these different products, both the organic evolution of our payments and custody business, but also the recent acquisitions. It really, in aggregate, delivers a holistic solution that no other company has, and it's up to us, obviously, to articulate that well and to execute on the delivery of it. But we're an ambitious and a confident group here. There is no other stablecoin issuer that has a native payments business, that has a native custody business, that has a native trading business, that has a native prime brokerage business, that meaningfully contributes to a leading L1 that's doing all these exciting things around tokenization. And so I see that as the biggest opportunity, and I couldn't be more excited about One Ripple and everything that presents in terms of opportunities going forward.
Yeah, I'd echo that sentiment. I think what's exceptionally interesting about our strategy is that we've been very much focused on solving the internet of value, but when we actually think about what that means practically, it's enabling financial institutions really to build their digital asset business, to move value around the globe, whether or not it's despite what asset class that is. And to do that, they need a partner that they can do that with at scale, who understands how to do this compliant first, who understands institutions, and that can provide that full life cycle from kind of conception of idea right through to execution. And owning our infrastructure and owning that kind of across the board really does enable banks like SocGen, like BBVA, really power their digital asset business. I'm exceptionally excited about kind of continuing to add to that stack so that partners, the largest banks in the world, really can grow their business on our underlying technology. And we continue to hear that message loud and clear from our customers that they want to see more of that. They want to buy more products from us, which is a really exciting position to be in.
Jazzy, maybe on the XRPL front, what are some technologies that you think are untapped or most interesting that you would like to see built now with the release of the EVM sidechain as well?
Yeah, good question. There's a number of exciting technologies on the horizon. One that I'll call out is zero knowledge and finding the right, approach to support private transactions in a way that also is comfortable for regulators and compliance teams as well. When you're looking to bring financial institutions onto the blockchain, obviously there's a big question around privacy and what can the public see, and when, uh, prime brokers and whatnot are not looking to expose, the positions, every movement of their client base. And so looking at how you can leverage, privacy in the right way to help to support some of those transactions is something that we're excited about. On one hand, the other is, scalability. Back to Jack's initial comment about 10xing, 100xing the blockchain volume and usage over the next 10 years with institutions. We're looking closely at some new technologies in terms of how to allow the blockchain to scale to support that need and also continue to improve its performance metrics. So those are a couple areas I'm especially excited about.
To wrap things up, I would love to hear from all three of you in the long term. How does Ripple kind of envision its role in shaping the global finance side from a product, European market, and stablecoin angle, each for all three of you?
We're going to continue to lead from a policy standpoint. We're quite active in terms of advocating on behalf of the industry. We've got a terrific team around the world who has gotten to know the regulators, who contributes to the thought process around regulation. So I think we're going to lead from that perspective. We're certainly going to lead from a product standpoint. I think we increasingly are meeting the customers where they are. Cassie touched upon that earlier, and with the One Ripple mantra, I think we will, on the margin, become even more of a holistic solutions-oriented company in terms of how we think about bringing blockchain-enabled infrastructure to institutions to really drive this industry forward. So I think it's a combination of what we'll do from a regulatory and policy front together with the product side.
So from a European perspective, I think continuing down the momentum of growing this one Ripple story with our existing customer portfolio, but also continuing to support large banks, regional banks on starting their digital asset journey, which is a continued momentum on the back of MiCA. So from that perspective, we want to enable, we want to power, we want to have these customers or have these partners really see the benefits of blockchain technology, and also provide those experiences to their customers. I think from a UK perspective, we'd like to see greater regulatory clarity and greater momentum and acceleration of that on the back of a more positive or pro crypto government stance. But yeah, I think the time really is now. I've said that a few times in this webinar, but the time is now. We really want to capitalize and seize the momentum, and we believe that we're in a position of strength, not only from a kind of trusted advisor perspective, but also our product capabilities and regulatory positioning. We believe that we can seize the moment and really scale the business here in Europe.
Yeah, I can round us out. So I would echo what Cassie and Jack said about solutions for institutions where they are today. DeFi innovation has been exciting, is all well and good. A lot of new things have been discovered there and could be leveraged down the line. But ultimately, we need to be solving real problems with real solutions, and doing so in a way that's accessible and doesn't force compromise when it comes to privacy, performance, security, any of that. And so we're excited to bring together the pieces from all of our different product areas to really do that and help solve problems and improve the businesses of our target users and customers.
Amazing. Well, Jazzy, Cassie, Jack, thank you so much for taking the time to share the insights, and thank you to everyone for listening in. Looking forward to chatting again next quarter.